Japan is known as one of the world's biggest holders of foreign reserves. Here's a graph comparing the total reserves of the largest holders in the world. Here, you can see that Japan holds a massive $1.29 trillion, which puts it above economies like Switzerland, the United States, India, and every single country out there except for China. Such enormous reserves is a result of Japan's export-oriented economy, where they had exported some of the most in-demand vehicles and technology. But there is a particularly interesting feat about Japan's foreign reserves, and it's in the fact that while they are the second largest holder of foreign reserves, they aren't actually a big holder of gold reserves. Here's a graph on the largest holders of gold reserves by country. Here, you can see that the world's largest holder of gold is no other than the United States, with over 8,133 metric tons. Comparatively, Japan only holds 846 metric tons of gold, which is nothing compared to the holdings of the United States, Germany, Italy, Russia, and China. To some observers, this is quite weird, isn't it? As one of the world's biggest economies and holder of foreign reserves, which surpasses most of the nations we've seen on the list earlier, shouldn't Japan also hold a significant amount of gold as well? Well, the reason for Japan's low gold reserves relative to its total reserves is due to many factors, some of which span Japan's economic history. To understand why they hold so little gold reserves, let's talk a bit about the history of Japan's reserve accumulation. Japan's economic rise as Asia's largest economy during the late 20th century coincided with its reserve accumulation. You can see this if we graph out Japan's total reserves by year. Here on the graph, you can see that Japan's reserves grew from $38 billion in 1980 to over $361 billion by 2000, and continued to grow from there. This is a result, as we mentioned earlier, from Japan's exports. They were exporting massive amounts to all around the world. To understand this, let's graph out the merchandise exports of Japan and see its growth. Here on the graph, you can see that during the years it saw its total reserves grew. So did Japan's merchandise exports. In 1980, they had merchandise exports of only $130 billion, but by 2000 it grew to over $479 billion. This exports helped Japan build its foreign reserves, but most of these foreign reserves are not dominated by gold itself, but rather other assets like the US dollar, government bonds, and treasuries. Let's graph out the reserve assets of Japan by component. Here, you can see that out of the $1.2 trillion in reserves that they hold, $1.07 trillion of which are in foreign currency reserves, and these includes securities and deposits. What this is about is currencies, bonds, and treasuries, which we just mentioned earlier. You can see that gold is only valued at $71 billion in this list, which is nothing when compared to the foreign currency reserves. But out of this foreign currency reserves, a huge amount of it is actually placed not just in the US dollar, but rather specifically US treasuries. US treasuries are known as some of the safest and most liquid assets in the global financial system. They are essentially debt securities issued by the US government, backed by the full faith and credit of the United States. Countries like Japan, China, and others buy these treasuries to both earn modest interest and to store value securely in the form of US dollars. These bonds are easy to sell in global markets, making them perfect tools for a central bank that might need to intervene in currency markets quickly. Here's a graph on the largest holders of US treasuries as of January 2025. Here, you can see that it is no other than Japan that holds the most US treasuries out there. They hold over $1.07 trillion, which is so much more than China, the United Kingdom, and every single economy. And indeed, this huge amount of holdings of US treasuries are connected to Japan's foreign reserves. They bought these US treasuries over time. But that doesn't mean they haven't bought gold as well. They did. In fact, if we graph that out as well, we get to see a rise in gold reserve holdings over time. But it is, however, not really as much as their holdings of US treasuries. If we graph that out, we get to see that Japan's holdings of US treasuries rose massively. In 2000, they held only around $300 billion. By 2021, it even once rose to a massive $1.3 trillion. These simply shows that Japan had prioritized buying US treasuries for its foreign reserves over gold itself. So, why is that the case? Well, it also lies in Japan's historical accumulation. Back in 1985, a massive event occurred around the world. It was the so-called Plaza Accord. The Plaza Accord was an agreement among major economies, including Japan, to depreciate the US dollar relative to other currencies. You can see how this played out if we graph out the exchange value of the dollar to the yen. Here, on the graph, you can see that Japanese yen, after 1985, had risen in value against the US dollar. That is a result of this Plaza Accord. But there's a problem with the Japanese yen rising in value, and that lies in the fact that when the yen rises in value, they make Japan's exports weaker. To keep the yen weak, Japan has engaged in regular intervention operations, buying and selling foreign currencies. Had they not done this, then Japan's economy would have suffered from a collapse in export competitiveness, a cornerstone of its economic model. But to be able to engage in regular intervention operations, they needed liquid assets. Liquid assets are basically financial instruments that can be quickly converted into cash without losing value. Out of the many liquid assets out there, one has always stood out, and that is either the US dollar or US treasuries. US treasuries are well known to be among the most widely traded and trusted assets in the world. They are backed by the full faith and credit of the US government, meaning investors and governments alike treat them as risk-free or close to it. What makes them especially important for countries like Japan is that they are incredibly liquid. You can sell hundreds of millions, even billions, of dollars worth in the global market at any time without causing price shocks. This makes them the perfect instrument for currency intervention. Gold, on the other hand, can't really be sold that easily in large volumes without affecting the market price, especially during times of crisis. It is not as liquid, meaning it takes more time and effort to convert into usable foreign currency. Central banks would need to find buyers, often go through specialized channels, and potentially even move physical gold if it's not held in a major vaulting facility, like those in London or New York. To show you how this plays out, let's put a recent sample here. In July of 2024, it was reported that Japan spent over 5.53 trillion yen, around $36.8 billion, intervening in the foreign exchange market to support the yen, which had fallen to 38-year lows, nearing 162 yen per US dollar. This intervention was prompted by rapid fluctuations in the yen's value, particularly between July 11th and 12th, when the currency surged from 161.76 to 157.30 against the dollar. The Ministry of Finance's actions coincided with a broader decline in the dollar, influenced by US political and economic conditions, including comments from the then presidential candidate Donald Trump expressing a preference for a weaker currency. $36.8 billion isn't a small figure. It's massive. Had Japan held gold instead of US treasuries, then this kind of intervention would have been far more difficult, if not impossible. Now, beyond this historical reason, it is also important to know that US treasuries are bought because they provide yield. US treasuries provide anywhere between 3% to 5% annual return depending on the maturity and the prevailing interest rates set by the US Federal Reserve. Gold, on the other hand, doesn't really offer any interest or income. To put it in perspective, a 3.5% return on $1 trillion in treasuries means $35 billion a year in interest income. Money that can be reinvested, used for public spending, or to offset intervention costs. Gold cannot do that. That is one of the biggest reasons why many hold US treasuries, and not just Japan. They are indeed liquid, safe, and offers yield. So, as you can see, Japan's relatively small allocation to physical gold, when compared with its astronomical foreign exchange reserves, is the product of history, policy choices, and something deeper that we haven't mentioned yet. It might also be because Japan is an economic and military partner of the United States, meaning that geopolitical alignment and strategic trust play a critical role in its reserve composition. But anyway, do let us know what you think. Thanks for watching.